JSPL is the next corporate that we're speaking to after the company confirmed that they are purchasing Monnet Power's Angul Plant for about 410 crore. The company had told us earlier that Angul unit's capacity is 1050 megawatts and it will ensure cheaper power for JSPL. To discuss this, we're now joined by Bimlendra Jha, the Managing Director at JSPL. Mr. Jha, morning, and thank you very much for joining in. Could you just confirm the capacity, how much you are paying, and to get it started, what would be the investment that JSPL would need to make?
Yeah, good morning, and thank you for getting me on the show. Yes, the capacity is, as you have said, 1050 megawatt, but it is 2 units of 525 each. And as you have rightly confirmed, it is 410 crores that we have paid for the asset purchase under NCLT. And we are going to make sure that these capacities come on stream in 2 phases. That means we will be commissioning the first turbine and then the next one over a couple of years. So that should approximately anywhere between 1,500 to 2,000 crores. It should cost. The first one, because most of the things are in place, will be done faster and probably cheaper.
So this 1,500 to 2,000 crores that's going to cost you, is it going to be funded from your...
2,000.
Yes, 2,000 crores.
I said 1,500 to 2,000.
Yes,
I said 1,500 to 2,000.
Yes, Mr. Jha, that's what I said as well. I don't know if my voice is reaching you, but this 2,000 crores that is going to cost you, right? Is it going to be funded from your own books, and will this be, will this add to your debt?
So I said, first of all, 1,500 to 2,000. That's why I did not give you 2,000 as the number, first of all. And secondly, the numbers are already budgeted for in our books with the kind of EBITDA that we are having. We do not expect that the debt should go up, as it will be done over a period of 2 years. And as you know, that the cash flows will be funded from the business itself.
So Monnet Power's Angul plant is 20% more carbon efficient, right, versus your existing units?
It is on a direct basis 20%, but if we take everything into considerations, we expect 25% improvement in efficiencies, including carbon footprint.
So how much will this help in bringing down the cost? Because you will use it to replace your existing current power facility, right? Are there any numbers we could work with?
So actually the time frame in which this will come up, by that time our coal mine should also start.
Okay.
And therefore the cost of power will be substantially reduced from the current levels. If you look at the current market prices, it is upward of 6 rupees per unit, and this should be below 2 rupees per unit.
Okay. And what is your blended cost of power right now? Market price is 6 rupees per unit.
So we are purchasing some amount of power, and we are also using our internal facilities. And that is why with 25% efficiencies, with the blended cost of power closer to around more than 5 rupees, we are likely to have a decent reduction in our power cost with this acquisition.
Okay, a decent reduction in the power cost. That's good to hear. Can you tell us about steel prices? Has there been an upward revision in the steel that you sell? If yes, how much has it been? And what's the current difference between domestic steel and landed imported steel?
You see, steel market prices keep going up and down, and recently China has opened up its COVID restrictions, so international prices have moved up. The domestic demand is strong, as we had mentioned it earlier in earlier interviews also. This is the right season for India. So in terms of the market prices, there is stability, although there is a small volatility that we can see in last 15 days. But overall, we see the market to remain stable at the moment. With this stability in India and what we expect due to opening up of COVID restrictions in China, the prices that have moved up, internationally, this should also provide more confidence to the consumers, and consumers are returning to the markets. Also, stocking up inventories may start as they would see the bottoming out of the prices. But nobody has a crystal ball on prices. What we focus on is our own efficiencies, and we are an efficient player. We are not really worried too much about market prices.
Just one follow-up. You had earlier told us that there's a significant reduction that you expect to see in power costs. How much could this aid your operational performance? Because in the quarter gone by, your adjusted EBITDA, adjusted for all the forex gains, etc., was around 1,500 crores thereabouts. Do you think you can improve that in the second half of the year?
It will definitely improve, but I will not give you a forward-looking statement on quantification, as has been the case in the past. I do not give exact numbers or even approximate numbers. I just give directional statements. Please bear with me on that.
Okay. Sir, there are reports which suggest that the government plans to invite expression of interest for the divestment of RINL, and that could come as early as January end. Would JSPL be interested in bidding for it? And what, according to you, could be the fair value of this asset?
Okay, so RINL is definitely a good asset, and we are definitely keen on it. So it's something that I can confirm. But what I cannot give you is a fair valuation, because obviously it is a competitive bidding, and we do not want to get into anything to show our hands on this one.
Okay. So why is it that you are interested in RINL? What's its capacity? What will it do to JSPL strategic plans?
It is a very good plant, good location, is port-based. It has got possibility of all logistics cost being reduced. And B, it is complementarity of our own product basket. We are very, very construction focused at the moment. And you can see that RINL has a big focus on long products. Therefore, we do have that complementarity. As our next phase of expansion is happening in flat products, this will be an equivalent kind of a number that is coming up in long products. So we do see the balance being retained by JSP by acquiring this asset, and also due to the logistics cost, as I mentioned.
Okay, we will let you go on that note, sir. Thanks a lot for joining in, and all the best for the new year. Thanks for speaking to CNBC TV 18.